This is your investment update for December 2017. Another great month for the stock market. S&P was up 1.1% and international stocks were up 1.6%. So for the year 2017, the S&P was up 21.8%. So a fantastic year. International stocks were up even more at 24.6%. On the bond front, it was a quiet month of December. U.S. bonds were up about 0.5%, and international bonds were up a little over 0.3%. So for the year, domestic bond market was up about 3.5%, and the international bond market doubled that up. Was up about 7.5%. So just an overall great year for asset returns. And actually, this was the first year in market history that the U.S. stock market showed a gain in every single month. So that's pretty remarkable, and just a complete outlier year. It's never happened. It was also a year of extremely low volatility. The market, seemingly went up every day. It felt like we had very few down days throughout the year. So it was just kind of a very complacent year, and stocks melted up, and everybody made money, which is a good place to be. As we enter the end of the year, and it's carried over to the beginning of this year, the market is really ebullient right now. It's going up, seemingly every day. A lot of what people are attributing that to is the tax reform bill that passed. And that is the likely culprit. That's obviously going to help corporate bottom lines. It is definitely going to help areas like small caps and financials, and it's a big boost to corporate profits. And the market is now looking like it's going to price in future growth ahead of expectations, and maybe drag forward some share buybacks that could happen from companies repatriating cash that they have overseas. That was part of this tax reform bill too. So the market's taking this tax reform bill and taking the ball and running with it, thinking this is going to be a very good thing for the markets. It likely is in the short term. In the long term, this bill is going to increase our trade deficits, and those tend historically to become headwinds to growth when they balloon in size, as what we've seen in the past. So that's one thing to keep an eye on. But for right now, the market is really kind of has a one-track mind, and that's to go up every day. We would, tap the brakes a little bit and just caution people to kind of keep their eyes open and take smart risks. This is probably one of the most dangerous geopolitical environments we've been in, and probably in my lifetime at least. Just on Tuesday night, Trump tweeted in the evening that his nuclear button is bigger than the North Korea nuclear weapon button. And you have things like this going on every day. It's not to be taken lightly. It's something that's very serious. And geopolitical risks are something that the market has a very hard time pricing in. Tax reform is something that is very hard-coded, and you can look at how it's going to affect corporate profitability, and you can run stocks up in advance of that actually happening, because it's something that's, kind of obvious that's what's going to happen in the future. Geopolitical events are very idiosyncratic. They just kind of happen, and they come out of seemingly nowhere, and they can just inject risk into a market very quickly. So we're watching that. So we have kind of a good thing and kind of a tenuous thing happening at the same time. For right now, the good thing's winning. So as we head into 18, that's what we're keeping our eyes on.